Okay, quick touch base. Stock of the day, Nvidia reported earnings. Overall, as you can see, very muted opening. Stock's flat. As far as what we're looking at, of course, Nvidia is the underlying stock of NVDY, but the underlying is a big impact on what the NVDY stock does. It's an interesting scenario because it's pretty flat. So when you're selling call options, that's not always the worst case because you're selling options, getting pretty good premium. Especially during earnings, you got the elevated implied volatility, so you get more options premium. That said, when it comes out and it's flat, obviously not necessarily the worst case scenario, but as far as how NVIDIA did, pretty standard. Margin 56%, revenue 46.74 billion, keeps growing. Here's basically the line chart straight up. From an annual basis, it's even more pronounced. The huge jumps in 2023 and 2024 in terms of revenue, not only revenue, but also earnings. With the net margins also, it's crazy. As the years go by, their net margins increase as long as their revenue. They're by supplying jet fuel to their earnings. So very nice there. And then on an earnings perspective, I don't intend to cover NVDA or Nvidia detailed from a fundamental basis, but just hitting some of the top points. They beat earnings, $1.05 versus $1.01 estimate. So pretty standard. That said, the company always comes with great expectations. So when they meet or don't blow by too fast, looks like it opens with a flat open. So I guess jump into NVDY here quick. Why is this not terrible? Because you can see when NVDA, it looks like I got $1.80. I don't know if this is delayed by any means, but when it's about $1.80, you can see we sold calls at 180. So if it optimally, I guess if you're looking at maximizing the value of what you get out of your weekly calls that you've sold, if it falls right at 180, that's not too bad. So because of that even though NVDA is down 0.7%, the NVDY is actually up because the synthetics probably not moved too much, and they're basically cashing in all of these call options at the moment, considering NVDA right around where the lowest call option they sold. So these call options have a potential to expire and worthless, and so do all of these ones. And it's on a implied volatility basis, they took in a decent amount of money writing those. So I guess from a fund makeup perspective, the synthetic is still, maybe I'll go on a per share basis. I like to look at the per share basis in general, just because we don't own shares, or investors in this don't own the entire ETF. They own a per share, and they can multiply this, of course, by how many shares they have. But the ETF price, just about 17. It's being boosted above the cash holdings by the synthetic value. And these other contracts at the time of pull were 31 cents, but clearly could potentially go to zero, thereby pumping the ETF value potentially by 31 cents. And they all do expire 8/29, so they all will expire at the end of this week. So we'll clearly see what happens. It's right at 180 right now, so that's nice to see for those who want the weekly calls to expire worthless. They did have their full capacity used. Yeah, I don't know. That's just an example of usually the YieldMax ETF will follow the underlying, but in a case like this, NVDY can be positive and the underlying is negative when they're fully leveraging those weekly call options and taking the premium, but not giving back much in return. So hopefully those premiums expire worthless. Of course, that said, it wouldn't be bad. We got another day or two of trading. If Nvidia keeps climbing to even 187.50, or if it really climbs, it's not bad because you start capturing the upside again here. But if it keeps climbing, NVDY will continue to go up. It just will not go up with the same percentage increase as NVDA will. But yeah, let's see. As far as a fund holdings versus time. So as I want to know. So what is this graph for people who don't know? This is basically a time series. So here's the snapshot. So this is today. But if you make this and capture it every day and see how these different bars trend over time, that's basically what you got here. So you see over time, we're up to 828. As I noted before, we got 31 cents in option premium that could potentially expire worthless. So if that goes to zero, it would add 31 cents to the ETF price. Cash has been growing as they've been selling those. They paid out their distribution. They're down to $15.64. They're already back to $15.94, so a 30-cent gain there since their last distribution payday. And since then, their synthetic hasn't been doing too bad, staying at a positive. So just, I guess, chugging along. And then here's just another look at it from a percentage basis. So with time, the last few days, the synthetic has gone up. What they've sold in terms of option premium has gone up, but that could potentially expire worthless, pushing everything else up. So yeah, NVDY, I guess overall not doing too bad, falling post earnings. Potentially we're looking at, I'm just looking at what their last distribution was. It was on the 14th. So the next distribution, I don't know, might be supported somewhat well just because they're trading from a positioning standpoint, looks to be almost optimized post-earnings, which with a stock like Nvidia, that's projected to move pretty high in one direction or another following earnings. When you get that flat earnings or not too big of a dip, we got all these options structured optimally. So yeah, NVDY, actually a rarity, is performing better than the underlying equity post-earnings. Anyway, that's a quick look into NVDY and how it's formed post-earnings. Thanks.